Guys, we got a good one today. Oh boy. Welcome back to Strongman Personal Finance. So I saw a comment, Jeremy, you should talk about one of his stocks, the Cheesecake Factory. And I got a little interested because I've always heard about the Cheesecake Factory. I think I ate there one time. I think I was in Texas or something. But I've definitely eaten at one of these, whatever you freaking call it, at one of these restaurants. And I remember during the pandemic, people were talking, the Cheesecake Factory, oh my god, it's going to 10x. And now I'm finally looking into it. And my upfront impression is this is one of the lamest stocks I have ever seen in my entire life. Why? It's a restaurant, okay? I know stocks don't necessarily have to be entertaining, but the whole restaurant industry, it's just they're everywhere. I mean, low margin. There's so much competition. Why? The Cheesecake Factory? Because they make good cheesecakes? Is that why you're bullish on the Cheesecake Factory? You want to eat your little cheesecake and get fat and disgusting? Anyway, Jeremy Lefeefee likes this stock, so let's check out the Cheesecake Factory. So basically, if you've been to one, they have some really good cheesecakes, and they make, looks like kind of soy boy food, avocado tacos. Basically it's a restaurant. There's really not much to say about it, okay? Now, they made an acquisition a couple years ago. They bought this company called Fox Restaurant Concepts. I guess the founder's last name is Fox. Mr. Fox. Huh? And the restaurants seem like a bunch of unique places. You got Flower Child. I would definitely not eat there. Flyby. The Henry. I'll show you a big fat Henry. Culinary Dropout. The Blanco. The Doughbird. Olive and Ivy. Just a bunch of very niche weirdo restaurants. But, I guess I would check one of these out. They're probably expensive. But basically, the Cheesecake Factory, they mostly have Cheesecake Factory stores. I think they have 2 factories where they make cheesecakes. They acquired Fox Restaurant Concepts a couple years ago. And they have this thing called North Italia. Oh my God, Italian food. How unique and original. Okay. So let's go ahead and look at the overall stunk. It's got a $1.48 billion market cap on revenue of $3.41 billion. Most recently, it's had net income, so it's profitable. And they pay a dividend. That's amazing, okay? Now, over the past year, the stock is up 0.28%, and it's down 45% over the last 5 years. And over the last, they've been public for a long time. They're up 745%, okay? So, this doesn't matter. I don't care about this. It's all about the future. But, it's just to kind of put it into perspective. Let's look at the revenue growth. So we could see revenue was basically flat. And then, all the way through 2019. Then they acquired Fox Concepts. I'm just going to call it Fox. Foxy Cleopatra, if you know my reference. Anyway, they acquired Fox. And then the pandemic happened. And then the pandemic ended. And then now the revenues come back up. Okay, very good, very good. Let's look at share change. So shares were actually going down. Looks like they were buying back shares. And then the pandemic happened, and they had to issue some shares. Makes total sense, okay? But now they're going back to buying back shares back a little bit, okay? So overall, it looks like shares are starting to decrease over time. Earnings per share over time has basically stayed the same, maybe even gone down a little bit, okay? Diluted earnings per share, same thing. EPS growth, at least year over year, is up. Free cash flow. Wow, it's actually down over time. Interesting. And free cash flow per share is also down over time. Now, the dividend has... Oh, look at this. Look what the pandemic did to this company. Okay, they were paying a steady, growing dividend. And then the pandemic happened, and they suspended their dividend. And now it's back, and it looks like it was, at the levels it was roughly in 2017. So we'll see if they raise the dividend. Let's look at gross margin. So overall, gross margin, this is just the cost of the food, basically. Stuff like that. Their gross margin has mostly stayed stable. It's trended down very slightly over time, but nothing to be massively concerned about. Operating margin, so we see these massive distortions, so it's kind of hard to see. But it looks like their operating margins have shrunk from historical operating margins. You can see back in 2014, 2015, they're in the 9s, 8s, and 9s. And now operating margins they're barely scraping by. Now remember, operating margin is before interest and taxes. And obviously profit margin is down as well. So overall, you got some decent revenue growth, probably because of the acquisition and probably a little bit to do with inflation. and you got slightly compressing margins. They're slowly buying back shares, and they reinstituted their dividends. So I guess that's amazing, okay? Let's go ahead and look at cash flow. Operating cash flow, it looks like it's, within normal ranges, but it's been trending down a little bit. Capital expenditures, they definitely cut back during the pandemic, and they haven't returned to where they were before the pandemic, but, they're still investing. Acquisitions, so we could see looks like the last quarter of 2019, that's when they bought Fox Concepts. Oh, so original. It's a restaurant that's nice, and they have nice cushions and stuff. Oh, my God. Okay, we know about the dividend. They suspended it. And we know they're buying back shares. Very, very, very small amounts of shares are being bought back, though. But overall, I don't get the excitement. Oh, the Cheesecake Factory. Their food's good. What's so special about the Cheesecake Factory? They have good cheesecake. Oh, they sell cheesecake to Barnes & Noble. Wow. Oh, they have an Italian brand, and they have all these quirky restaurants, and they have cheesecake factories. It's so cool. Now, if we look at margins, okay, basically what is the vast majority of their expense? Well, 23% of their expenses come from food. 35% comes from labor, and basically the rest are other operating costs and expenses, whatever that means. But we could see revenue growth year over year is not that great. It's probably around the level of inflation. This is not a rapid growth company. Now, overall, I want to look at the balance sheet because that's what I'm most interested in with this company, because I have a feeling the pandemic maybe wrecked them. We'll see. So here's the balance sheet, okay? We got cash of $91 million, and accounts receivable of $71 million, and income taxes receivable. Oh, very interesting right there. So overall, their roughly liquid capital is, just over $200 million. Their current liabilities, on the other hand, are $623 million. Let's see if this is normal. Do they normally have a very low current ratio? Let's go look. So quick ratio, it's within normal bounds. It seems like a lot of restaurants operate like this. They tend to not have a lot of cash on hand at any one time, but this isn't outside the realm of normalcy, okay? So I don't like their current ratio, but that's probably just inherent in the restaurant business. And, obviously these inventories, they probably churn them over pretty quickly. So overall, their current ratio isn't that great. Let's look at their property, plant, and equipment. $770 million of PP&E versus long-term debt of $469, okay, and other non-current liabilities of $122 million. So overall, they're not underwater when it comes to their long-term assets. Now, it seems like they actually lease a significant portion of their buildings instead of owning them. You can see that they're operating lease assets. When you lease a building, you got to put it on your balance sheet, and you got to have a corresponding lease liability, and then you amortize it. But basically, they seem to lease more than they own, which I guess that's less capital intensive. Okay. Let's look at shares. So, yeah, really no crazy change in shares year over year. Let's see. Yeah, I don't think they're going to go bankrupt tomorrow. Their balance sheet's not outside the realm of normalcy. They operate, like I said, with a much lower current ratio. But, I don't get, why? What's so interesting about this company? Oh, they make cheesecake. Wow, it's so good and yummy. Oh. So that's my thoughts. I have zero interest in buying this company. Oh, but the stock went down. Look, bro, see, it went down. So you buy it, and then it'll go back up. Whatever, Jeremy. Do what you got to do. Cheers.